Tax shelters show up on the EA exam in two ways: reporting and ethics. The IRS uses the term reportable transaction for deals that smell like tax avoidance. Sometimes you'll also hear listed transaction, meaning the IRS has specifically identified it as abusive or potentially abusive. Your job is to recognize when special disclosure rules kick in and when a firm's procedures must catch risky behavior early. When a taxpayer participates in a reportable transaction, Form 8886 is the big compliance flag. It gets attached to the taxpayer's return for each year of participation, and it's per transaction, not per return. So multiple shelters can mean multiple 8,886 disclosures. On the exam, watch for wording like must be reported, tax shelter activity, or listed transaction. That's your Form 8886 trigger. Don't mix up disclosure with permission. Filing Form 8886 doesn't magically make the tax benefits allowable. It just tells the IRS, here's what we did. The IRS can still allow it, limit it, or disallow it based on the law and the facts. EA exam tip: if an answer choice says the IRS automatically disallows any disclosed reportable transaction, that's usually the trap. Now, penalties. Reportable transactions can trigger heavy civil penalties when they create an understatement of tax. The framework you'll see tested is: an understatement penalty can apply, and there can also be a separate civil penalty tied to the reduction in tax from the reportable transaction. Even if the taxpayer discloses, penalties may still apply. Disclosure can change the penalty posture, but it doesn't erase risk. The IRS also targets promoters. Abusive shelters and trust schemes often try to hide who owns assets or earns income. When the IRS identifies a promoter, it can use legal tools, like a judicial subpoena, to demand a client list. The enforcement concept matters for ethics questions. Promoters aren't just selling planning, they can be pulled into investigations, and their client base becomes discoverable. Finally, firm oversight. Circular 230, Section 1036. If you oversee a firm's tax practice, you must take reasonable steps to ensure the firm has procedures so everyone complies with Circular 230. And it's not just have a manual. If you know someone has a pattern of non-compliance and you don't act promptly to fix it, you can be sanctioned too. The exam loves the partner scenario. You suspect bad behavior, you ignore it, and you get disciplined. One more ethics tie-in. Circular 230 also hates audit lottery advice, telling a client to take a shaky position because audit odds are low. That's exactly the kind of culture Section 1036 procedures should prevent. Good procedures mean training, review, escalation paths, and documentation. On the EA exam, if you see a supervisor who says nothing while others push reckless positions, that's a Section 10.36 problem waiting to happen. Which of the following is specifically cited as conduct that could trigger sanctions against a tax preparer under Circular 230 Section 10.51? The choices include things like a felony arrest for breach of trust, parking tickets, conviction on a criminal offense charge, and a felony arrest on a criminal offense charge. Think about it. Which one is actually listed as disreputable conduct? The correct answer is conviction on a criminal offense charge. Circular 230 Section 10.51 specifically lists conviction of a criminal offense as disreputable conduct that can lead to sanctions. A tempting wrong answer is a felony arrest because it sounds serious, but the rule is written around conviction, not just an arrest. Which statement is not correct about a reportable transaction? The options say: a 30% understatement penalty may apply to an undisclosed reportable transaction. A reportable transaction is also called a listed transaction. It's a tax shelter activity that must be reported, or the IRS will automatically disallow the tax benefits of any reportable transaction. Think about it. What's the incorrect statement? The incorrect statement is that the IRS will automatically disallow the tax benefits of any reportable transaction. Disclosure, like filing Form 8886, is not automatic disallowance. it's just reporting. A tempting choice to doubt is the penalty statement, but penalties can apply when an undisclosed reportable transaction creates an understatement.